how we fight against that largest expense, which is the tax, is we then after the investor gets all their money back, we then refinance the property, and the investors get to stay in the deal.
Would you tell them a little bit about your story? And by the way, we'll be talking all things three-dimensional commercial real estate investing here in a minute with Blake. But let's start with Blake's story. Go ahead, Blake.
Yeah, I think big picture is start at the college dropout without a penny to my name, no one to own a business some way, somehow, and didn't know you couldn't defer student loans any longer. So I had to humbly move back in with mommy and daddy back in 2006, and ended up getting a letter in the mail to go to a conference for real estate. Went to it, realized that I was wired for numbers. It was less real estate. I was wired for numbers, knew nothing about renovations and so forth. Fast forward, ended up doing 300 plus transactions of wholesales and flips and so forth in the residential area. And then 2012 went into commercial real estate, went to corporate housing, and which is fully furnished, all bills paid, sort of like a hotel, but we did that in the oil industry. And then still have corporate housing, went into apartments and wedding venues. I think that intro was fantastic, but it's a little outdated. So what we've realized is, most importantly, is flowing into your podcast is the capital gains is what was hitting us when we were doing a syndication. So for instance, apartments, syndicating an apartment value add deal, you find the treasure and then you do the value add, and now it's time to sell this treasure. And obviously now if our investors didn't go into a 1031 or something, we'd have this massive capital gain issue. So we ended up shifting into running hedge funds in self-storage, mobile home parks, and cryptocurrency. And in these funds, we actually never sell. So we never sell the actual asset. And specifically in self-storage and mobile home parks, how we fight against that largest expense, which is the tax, is we then after the investor gets all their money back, we then refinance the property, and the investors get to stay in the deal. So they still own interest proportional to their amount of money in the deal, but all their money, all their actual principals back in their hand, and we refinance. So instead of doing the value add and then selling and then having that capital gains consequence, we now do the value add and then refinance.
Love it.
And pay that distributions back to the investors, but that's a loan versus a capital gain, so there's no taxes.
So fun. Okay, so we're going to geek out, Blake and I, here in a minute. But Blake, and I appreciate that. That's really cool.